and welcome to The Real Deal. I am your host, Kim Hollingshead. We are here every Saturday night from 9 to 10 p.m. Thank you so much for joining me on your very busy Saturday evening. Guys, we go over all kinds of things here on this show. We talk about real estate, mortgage, real estate law, title insurance, the market, all kinds of things going on in the news. I'm a real estate attorney. I have been here in the Middle Tennessee area for going on 15 years and owning my own real estate law firms, title companies, and really been in the title insurance and real estate industries here locally for about 20 years. It is really my privilege to bring this information to my amazing listening audience. I am so grateful for each and every one of you guys. I just got back from the R4 conference. This R4 is the RE/MAX conference that they have every year. This year it was out in Las Vegas, and I'm really privileged to work closely with the RE/MAX office. Just in Middle Tennessee, we serve 8 or 7 RE/MAXes in affiliated relationship. And as of that, I got to go to R4. I love real estate conferences, you guys. They are so much fun for me. And it's really just awesome to go out there, to get revitalized, to be around agents who absolutely love this industry. Many of them are like liberal arts or sales orphans. They came from other industries and ended up in real estate. They have loved it. It's really a very fulfilling industry to be in. It was such a pleasure to be out there with all of the agents. Part of my trip out there, I actually took a day and rented a car. I was staying at MGM, rented a car, went to Death Valley, which is like 2.5 hours away from Las Vegas. And the reason why I made that trek is because this is a year of the super bloom. So every year in Death Valley, even though it is the lowest point on the planet and the driest, hottest desert anywhere in the world, it actually used to be a sea. It was a very small, low inland sea. And so the bottom of Death Valley is covered in salt flats. And you can actually, when you're driving out there, you can see where it used to be, this huge body of water. It's so fascinating. I went out there because obviously last year was quite a season, let me tell you. There were a newlywed, had only been married for about 3 months to man who was me, amazing human being. I thought we were for marital bliss. So happy to have married him and met him in my mid-40s. And then shortly after we got married, things took a turn. And shortly thereafter, he actually died by suicide. And so that was in January of 2025 when he passed away. And the entire year was, there were just times when I didn't know if I was going to be able to make it. I'll be honest with you. I was like, God, praying and calling out to the Lord, how do people get through things like this? So much confusion, so much fear, so much. I don't want to go into my personal life and the personal details, but just so much that came up shortly before then. And then to have, obviously this terrible tragedy of my life was, talk about turning your life upside down. And then about 2 months later, I ended up having to put my dog Una down. Una was my best little dog. I had her for 14 years. She was amazing. And obviously anybody who has lost a pet that they're very close to, that's very dear to them, will understand that that is devastating, right? And then in November of last year, right before Thanksgiving, I ended up losing my best friend, Richard. I spent a week in the ICU. He was an incredible human being, loved him. Oh my goodness, he was my best friend in the whole world. And we ended up losing Richard. So all within this 10-month-long season, I went through so much loss. And I don't want to go into all of the other losses in my life at that time as well, but there was just a lot going on in that season. So, being in Death Valley, I just had to make the trip. It was like God was saying, Kim, you have to go out there and see this for yourself, because every year in Death Valley, there are some small wildflowers that come out. There's just enough rain, and these flowers have adapted in just the right way that they're able to come out and bloom. But once every about 10, 12, 15 years, is what's called a super bloom. And it is when all of the seeds that have blanketed Death Valley, they have been laying dormant for about 10 years, they all come out to bloom. And the reason is because there's enough rain and it stays cool long enough during this season that they're able to come out. And also in the bottom of Death Valley in the Badlands, there is a very shallow ancient lake that also reappears. And it's just incredible because you can catch a hint, a little glimpse into what it used to look like many, many, many millions of years ago. This just this mirror effect of this very shallow lake that comes out. And again, because Death Valley is covered in these salt flats, it actually melts the salt. And so you can walk out to this lake and there's just like melting salt everywhere. And if you taste the water, it's very salty. It's just incredible to see for yourself. And I was just reminded looking out, and Death Valley is big. It's like 80 miles or something from end to end. And I was reminded looking out at it that even there, even in the lowest part, even in the lowest valley, that God's grace was there and life sprang. And not only that, but just abundantly, how life was just abundantly covering this valley from end to end. It was such an amazing reminder, and it was something that I just really needed to see for myself. So I'm so glad that I went out there and was able to spend that time. Guys, no matter what is going on in your life, you can take it from me. I had some of the lowest moments last year, truly moments where I truly did not know. I was like, I don't know how people get through times like this. Like, how do you recover from this amount of loss, heartbreak, tragedy, and other losses as well that are layered on top of these that are apparent to everybody? It was just like, I went out there and I saw it and it was like, wow, God got me through this year, unbelievably, through my amazing family, my incredible parents and not beautiful siblings who have checked on me and love on me and speak life into me all year long. And so it's not just me. We've all had a rough few years. Okay, let's just be really honest about it. I know that people in the real estate industry and the mortgage industry and car sales and so many other areas, there are entire swaths of the American economy that are starting to be taken out by AI. We know that young people feel like they're never going to be able to buy a house or get a leg up in this world. They don't even know where to begin. And so it's not just me. We've all had rough times. But listen, last week we talked about this being the golden year and that this is the year of the fire horse. And so there are people who are predicting a lot of prosperity this year for themselves. So I do feel this kind of generally, not just personally for myself, but just generally in the world out there, that there is a way to turn around, that we are in this kind of comeback season. I know a lot of people feel that way. And despite these sort of events that we're seeing in the world, know that there is Israel and the U.S. have bombed Iran, and some people feel that that is a wonderful omen for the future. Some people don't. Some people don't want to see us out there. And regardless of who you are and what your political beliefs are, I think everybody can agree that we just want peace in that region of the world, and we want to see the end of human suffering on this planet. And so we can all pray for peace, right? We're seeing, despite all of this turmoil and chaos in the world, I told my everybody the other day, I said, oh my gosh, I need a break. I just need a break from Trump. It's like every day some new thing is happening. He's putting us through, right? And regardless of what your views are with him, it's been a lot. It's been a lot. This past, 18 months has just been a whole lot. So, but what we are seeing is that we are seeing some improvements in the market, and especially in the mortgage market. And in one serious area, the most significant area is interest rates. We are seeing a huge improvement in interest rates. Finally, for the first time in a couple of years, interest rates are below 6%. And we do predict that they are going to be hanging around this, 6.5%, 5.5, 5.75 rate over the next year. So what does that mean for you? For many people, they have been in these higher rates. Some people, the lucky few, are in interest rates predate the peak of October 2023. And, this is going to be a season of refinancing, I feel, in 2026. So what does that mean for everybody out there? How does refinancing work? And what is it that you need to know going into this time? Guys, we're going to break it all down for you on The Real Deal. We're going to be right back. You're listening to Super Talk 99.7 WTN here in Nashville, Tennessee. And welcome back to The Real Deal. I'm your host, Kim Hollingshead. We are on Super Talk 99.7 WTN every single Saturday. Thank you so much for joining me today. Guys, we are talking about refinancing, and this is a great time to refi. Look, let's take a look at it. In the 30-year mortgage rate in today's market is about 5.55%. The 15 years, 4.875%. VA is 5.37%, and the FHA is just a hair over 6%. Guys, let's take a look at what the mortgage market was doing back in 2021. In January of 2021, rates dipped at their lowest ever at 2.65%. In September of 2022, that was the last time that we saw rates as low as they are today. They were just at around 6%. And unfortunately, rates actually peaked for us in October of 2023. They reached almost 8%. It's unbelievable. We didn't see very much relief in the year 2024 or 2025 when rates averaged 6.7 and 6.6%. Now we're starting to see some relief. And I have to say, I am so proud to everybody who is a first-time home buyer and you did not let the interest rate stop you, because guess what? Now you're going to take advantage, because I know that your real estate agent and your mortgage lending professional, everyone was telling you, honey, you got to date the rate, you marry the house. And that's like one of my favorite sayings. So I'm sure you fell in love with the house. You were like, you know what? We can afford it. Even though rates are really high, we can make it work for a few years. You scrimped, you saved, you did whatever you needed to do to make that house payment work. And now rates are actually going to start coming down. So in today's episode, it's not just for people who are really familiar. They've had several refinances in their past. This show is really for people who have never refinanced before or would just really like to learn a lot more about it because you felt like you were in the dark the last time that you actually refinanced your mortgage. Lots of question marks. So, one of the things that I also learned about my incredible listening audience is that you guys love the numbers. I love it. My listening audience, you guys like to nerd out on the numbers as much as I do, and it feels so good. This is why you guys are my people. And so let's take a look. Let's do a little breakdown of an actual real mortgage. In a $400,000 mortgage, that is the national average, setting right around $400,000. If you took out that mortgage in October of 2023, when mortgage rates were at their absolute peak, your monthly payment was $2,875. And if you were to refinance today at the current rate of around 6%, you would see that your principal and interest would actually come down to about $2,408, which is saving you about $467 a month. That may not sound like a lot, but when you stretch it out over the course of an entire 30-year loan, that is about $168,000 in savings. Is that not amazing? So, we're going to take it back to the basics on today's show. We'll tell you really everything that you need to know about refinancing in 2026, because I hope most people out there are going to be taking advantage of this. So what do you need to refinance? Well, number one, you need to have a good credit score. So FHA loans, and there are certain types of other loans, but let's just go to FHA. That loan doesn't have a better interest rate depending on how good your credit score is. All you need is to have a minimum to meet that minimum requirement on your credit score. And, but when you move over into the conventional financing, which your refinance will be a conventional loan, then the credit score really, really matters. Well, how much does it actually matter? Matters a lot. On average, the credit score for somebody who is a 760 is going to save that borrower $90,000 over the course of the loan over somebody who has an average credit score of around 640. Now, credit scores are kind of a funny thing. It used to be that the credit score was just, easy to calculate, pay stuff off, have lines of credit available to you, but not using them. And it's not that simple in today's world. Actually, credit scores are actually starting to be calculated now on something that is called, the Vantage Score 4.0. The Vantage Score actually takes into account things like rent, utility, and phone bills, which is awesome because most people who are renting don't have a mortgage payment. So that doesn't calculate into their proper credit score. They don't get to benefit from it because they're just renting. Well, what's great about the Vantage is that actually takes those things into account, not just loans where you're borrowing the money or credit cards. It actually helps to raise the score for many people. The second thing is that lenders are starting to move towards something called the FICO 10T, which is a trended data score. Basically, they would prefer to see that you have consistency over time and that you have a really good credit history over the long haul, not just, oh yeah, I had that credit card, it had a huge balance on it for 3 years, but then I just went and paid it all off. So now my credit score is going to skyrocket. Yes, your credit score will go up if you do that, but what the lenders want to see is they want to see that consistency. So you're going to see, that they would prefer to see something more like, oh, I have a little balance on this card every single month, but I tend to pay it off every month as well. The first-time homebuyers that are out there, I have a really hot tip for you. If you're looking to build your credit score in a way where you can actually borrow money to buy a house, is that you have certain bills that you have to pay every single month. And I have a lot of friends who do this. They use their debit card online to generate things like, payments for the phone or the utilities or internet. But what you can do is you can actually take out a small credit card. Even if you have to pay $500 as a deposit or something to get that card open, get that small credit card in your name and put all of these things, the garbage, every single bill that you have that comes up every single month and you're gonna pay it every month regardless, might as well build a credit score while you're doing it. So I say, okay, what can go on the card? Your Netflix, your internet, phone bill, not only all of your utilities, so your electricity, your gas, your water bill, those things can go on. And over time, what you're going to be building is you're going to be building that consistency and you're going to be showing, hey, I get this small credit card and I pay it off every single month. What's also interesting is that those charges tend to be very predictable, so it's easy for you to budget for something like that. The hard part is being really disciplined to where you're not charging other things to that card. But try to just, when you first start out, pretend like it's not a credit card that's there. Go take the card, hide it in a drawer, don't use it, and just use it to pay your bills. You're going to see a huge improvement in the FICO 10T. One other thing that you're going to have whenever you refinance is you have to have equity in the property, and that equity needs to be 20%. So oftentimes, if you have plenty of equity in the property, a lot of times a lender isn't even going to conduct a full appraisal. They're just going to do what's called a drive-by appraisal. It's literally just drive by the house, snap a few pictures. They're like, yeah, the house is good to go. But there are definitely some things that you can also do to help you, when it comes to the equity of the home. Because that equity is based on the appraised value for the property. It's not based on what you purchased it for. And we all know that obviously real estate appreciates in value for the most part. So you do want to take advantage of the appraisal and try to put your best foot forward. Make sure that you have that curb appeal for the appraiser, that the house is super clean, that everything's put away. If you have a lot of little repairs that need to be made, make sure that you make those repairs. If you have animals, put the animals away, get rid of all of the animal smells, all the pet fur that's everywhere, And just make that house as presentable as you possibly can, just like you would for a regular listing appointment. Because that's going to help give you the most bang for your buck. And believe me, I work with commercial lenders and commercial clients all the time. Like I have one right now who's seeking to borrow $25 million and they are having a hard time on their appraisal. Like it's not just regular borrowers who have to take appraisals into account. It's a huge, huge part of borrowing on any piece of real estate, regardless of who you are. And then the third piece of the refi puzzle is going to be the DTI. DTI stands for debt to income ratio. Now, guys, this is going to really surprise most of you, but did you know that 48% of all loan denials happened because of the DTI? The reason is because it's not low credit score, it's DTI. The reason is because they want to buy a house and they just can't afford it. They just flat out don't make enough money to afford to buy that house. DTI is actually calculated on gross income, not even net income. So the fact that, 48% of loan denials are coming from this area and not from credit score, I think it says a lot. Making sure that you can afford the house. I was like, at the current payment, if your DTI qualified when you bought the house, you shouldn't have a problem with the DTI qualifying when you go to refinance the house, okay? And then the fourth piece of the puzzle is the proof of income. Lenders can prove income in a number of different ways now. They don't have to just use pay stubs or W-2s. Some lenders are actually using bank statements, and they can actually take on additional sources of income. So like, for instance, there was a time when I first started in mortgages when you couldn't factor in the income from a side hustle. Like you really couldn't. If you freelanced, or let's say that you have a regular 9-to-5 job, but then on the weekends you like to Uber, you would not have been able to use that income to supplement. But now lenders are allowing borrowers to do that, which is awesome. The only hang up is that you have to be consistent and you have to show that income for at least 2 years. But that's just like any other income that you would show your loan application. So when we come back from the break, we're going to delve deeper into refinancing. When does it make sense? When does it not make sense? And is there a way for you to actually lower your monthly payment without having to refinance? Yes, there is. I'm going to tell you about it when we come back. You're listening to The Real Deal on Super Talk 99.7 WTN. I'm your host, Kim Hollingshead. Welcome back to The Real Deal. I am your host, Kim Hollingshead. You're listening to Super Talk 99.7 WTN right here in Nashville, Tennessee. If you love what you're hearing and you're thinking, wow, she really knows her stuff and I want to refinance, I am not a mortgage loan officer, but I can point you to somebody who is. So definitely give me a call. The phone number is 615-549-1933. If you'd like to catch up on past episodes, feel free to find me on Spotify. I'm on YouTube, and all the reels are all over social media as well. And of course, you can find me on my website. Today, we are talking all about refinancing. Why? Because rates are coming down. They've been below 6%, you guys. This is huge, huge news in the real estate market. I'm really surprised that more realtors are not out there just shouting from the rooftops, guys, the interest rates are under 5% or 6%. This is incredible, because it really is. This is what everybody's been waiting for. So we're talking about refinancing because there are a lot of people who were first-time home buyers in the last few years, and kudos to you. I could not be prouder, of you for just biting the bullet and just going and buying that house. Man, I did it myself. I bought this house that I own in 2022, and let me tell you, I was not a fan of the interest rate. I wish it was a lot lower, but I did it because I was like, I'm going to take advantage of the market right now. I'm going to wait, because if I wait too long, I wait for rates to come down, I'm going to end up paying a lot more for the house. And let me tell you, I was around in 2021 doing loans, and I can tell you right now, you do not want to be in a real estate market trying to buy a house in that frenzy. I mean, forget about Labubu, forget about, the Teletubby dolls or whatever, kids are chasing at Christmas time. I mean, I remember there was like this Tickle Me Elmo thing when I was younger, and people were like bum rushing to go to Toys R Us to hurry up and buy this thing for their kids. And like parents were getting hurt. It was madness, craziness. But forget all of that because, I mean, the real estate market, when it actually like rates go down, right? The real estate market can be crazy. Let me tell you, I've had people coming to the table with over $100,000 cash. You know why? Not because the house was worth $100,000 more. No. The house did not appraise. And listen to me. In 2021, let's say that they were trying to buy an $800,000 house. If there were multiple offer situations, it was a buying frenzy. Everybody's coming to the table. Who can put their offer in and get their offer accepted? The offer that gets accepted is $800,000. And the house only appraised for $7,000. What do? You have to come up with the extra $100,000 cash. People were coming to the table with $50,000, $60,000 cash. I don't know about you, but I don't want to buy in a market like that. That doesn't sound fun to me. It doesn't sound inspiring. It doesn't sound calm, relaxing. It doesn't feel good. It feels really anxiety inducing. I would not be a fan of that. So I'm going to tell you, you can recast your loan later on. I'll tell you a little bit about that, but make sure that you're buying in a market that makes sense for you. You want to buy in a buyer's market, not in a seller's market. I mean, everybody knows that. So, and you're looking at buying in 2026, it's not going to get better as the year goes on. I would definitely recommend that you take a look and start talking to somebody now about qualifying for a mortgage, getting hooked up with the right real estate agent, and looking at qualifying now so that you can buy in a few months from now. So I am not a real estate agent. I am not a lending professional, but I can hook you up with the right people who can help you with that. And my phone number is 615-549-1933. Give me a shout. I'll hook you up. So we're talking about refinances. We talked about what do you need to refinance. We started out with credit score. Home equity needs to be about 20%. You got to have a good debt to income ratio, and you have to be able to prove your income. Now, what about the costs? So refinancing is not free. It's actually quite expensive because you have to pay for the appraisal. You have to pay for the title and escrow charges, government fees, lender fees, and of course, the credit report. So, when you get ready to do refinance, you have to take a look at all of those charges. And so, how much does it cost to refinance? On average, it's going to cost somewhere between 2 to 5% of the loan amount to refi. So if it's a $400,000 loan, you need to count on at least $8,000 in closing costs, and it might even be more. Well, there are some ways that you can save money. Number one is, it's actually included in the closing costs, but you don't have to buy your rate down. If you end up using the equity in the house to buy down the rate, that's great. That's smart. That's how a lot of people got into like 2% interest rates in 2021. Great. But you don't have to do that, and it'll actually save you some cash at the table. Number two is that you can work with a title insurance company that is going to offer you discounts. So like for my title company, just as an FYI, if you refinance with us anytime in the year of 2026, this is a one-time 2026 deal. Don't try to get this from me in 2027. But in 2026, we're actually discounting our closing fee all the way down to $299, and we're going to offer you a 30% up to 30% off discount for the title insurance premium, and that can save you like $1,000 right there, right? This can be a huge savings. And then factor in the closing cost credit you can get from your lender. Sometimes they'll just give you straight up lender credits in order for you to refinance. And you can avoid the appraisal altogether. There are some certain types of loan programs that will allow you to skip that appraisal. That's going to save you like $600, $700, $800, maybe even more than that. So there are ways to shave the closing costs down to save yourself a little bit of money. Definitely the things that you don't want to do. So we talked about what are the things that you do want to do to get ready. Well, number one, the first and foremost is that you've got to talk to a loan officer. And the reason is because everybody's Tanya Escobar, she has a radio show on Super Talk here, and she's from noon to 1 on Saturdays. And she has a saying that she likes to, which is everyone's financial DNA is different. And it's really true. You may talk to your neighbor and your neighbor's like, oh, I use so-and-so loan officer, and they were able to get me, an interest rate at, yada, yada. But you don't know what that person's financial picture looks like. You don't know how much money they have coming in, what kind of assets that they have, what their credit score is going to be. You just don't know. Also, because there are some people who just feel like refinancing is really anxiety inducing for them. And I understand, I get that because I'm self-employed. And so my income is all over the place. And it comes from several different sources. And it's really confusing to anybody who's looking at it from the outside in. For me to walk into a loan officer's office and to talk to them about refinancing can feel like I'm exposing a lot about myself. So I understand it's nerve-wracking. But don't be deterred just because you're, a 1099 or you're self-employed. There are plenty of ways that they can still qualify you for the loan, even if your tax returns show that you made next to nothing, which facts are facts that we're trying not to pay taxes around here. So number one is going to be talk to a loan officer. Also, and I want to put this out there, try to connect with somebody who is a local loan officer. I say this for several reasons. Number one, first and foremost, is because you don't know the people on the internet. Listen, fraudsters are so good at faking things. I had received an email just this morning from what looked like a legitimate title company. I mean, it had a full website, had logos, everything. And yet, whenever I went to go look up this company, it was non-existent. This was a fraudulent email that somebody had sent me to try to get me to click on the link to, quote, download documents. And it's just a way for them to try to get, into my bank account and to try to commit fraud on my escrow account. And you don't know the websites on the internet. You don't want to just click on whoever comes first on the Google ad. It might look like it's from a certain type of a mortgage company, but it may not be them. It may be. I mean, how many times have you guys ever went to go look up the IRS and, and all of a sudden it takes you to some random website that has nothing to do with the IRS? This happens. It happens all the time. You have to be so, so careful with mortgages because the financial information that is required to actually qualify you for the loan, it exposes you to so much fraud and so much danger out there that if you can avoid trying to do this online, try to do it that way. I mean, they're going to quote whatever they want to quote online, but at the end of the day, almost every mortgage company out there is pretty much going to charge the same thing. The reason is because if mortgages are traded, they're MBSs, they're mortgage-backed securities. They're traded on the secondary market. You're going to see very little variation from lender to lender. And I would just rather you work with somebody who's local, that you know, and that you can trust. When we come back from the break, we're going to talk about some of the don'ts, and we're going to talk about how you can possibly lower your monthly payment without paying all the fees associated with a refinance. You're listening to The Real Deal on Super Talk 99.7 WTN. I'm your host, Kim Hollingshead. We'll be right back. And welcome back to The Real Deal. I am your host, Kim Hollingshead. You are listening to Super Talk 99.7 WTN right here in Nashville, Tennessee. Guys, we are talking about refinancing today. If you are a first-time home buyer or if you are one of the people who ended up having to, through a number of moving jobs or getting a divorce or whatever, the number of reasons why people ended up buying houses in 2022 to 2025. And now you're like, maybe it's a good time to refinance. Hey, listen, if the rate is a 0.5 point lower and the closing costs make sense, you feel like you can stay in the house long enough to recoup them, then it might make sense for you to do a refinance. Right now, rates are in the high fives, so why not take a look at it? One of the things that you don't want to do when you're refinancing a loan, definitely please do not open any new credit cards. Don't open up any new credit, period. Not to buy a car. These are the types of things that can really throw off your credit score. And like I said, your credit score is heavily connected to the percentage of the interest that you're going to pay. Maybe can actually cost you a whole lot of money in the long run. Your loan officer, if you're smart and you talk to a loan officer before you even start this process, they'll tell you exactly what to do to get ready to make sure that you are getting the best rate humanly possible. And then number two is you definitely don't want to change jobs. And sometimes, look, a job change, like switching from one company to another, that is unavoidable, okay? But try not to switch careers in the middle of you getting a loan. That is really the thing that kind of throws it off more than anything. It's not necessarily like switching from one company to another. It's like when you literally are just switching entire jobs around. And then number three is try not to make any large unsourced deposits. Last week, we talked about FinCEN, we talked about fraud, and why the government is very interested in tracking all of your money. And we talked about how these new FinCEN reporting rules only apply to cash and private money transactions, and also to quitclaim deeds, just deeding property around. And the reason why they exempted mortgages from the FinCEN reporting requirements is because of this reason right here. Mortgage companies have to jump through so many hoops and they have to do so much reporting just to qualify a borrower for the loan. And one of the things that they check for is large deposits. You have to be able to show where the money is coming from. And then definitely there's going to be some times when, let's just say that you're in like one of those ridiculously historically low interest rates of like 3.5%, 3%, 2.75%, unreal. When does it make sense for you to actually refinance into a higher rate? So now the rates are like a little under 6. Would it ever make sense for you to do that? And yes, the answer is yes. There are going to be some times. I'm going to give you 2 reasons why you might take a look at refinancing this year, even if you're in a super low interest rate. Number one, if your low interest rate is due to you being in an FHA mortgage and you still have to pay mortgage insurance premiums, it might make sense for you to refinance into a conventional so that you can save that $250 a month. Number 2 is if your global or your blended interest rate is well above 6%, that is when you want to take a look at it. Some people have like $50,000, $60,000, $70,000 in credit card debt, and that's at like 25% interest. And then you take a look at their car note, and their car note's like 10%. Well, if you take all of that and you blend it together, that's a blended rate of like 13%, okay? And so it might make sense for you to tap into the equity of your home to refinance and bring that interest rate down, the blended rate down to 6%. Even if your original rate was only like 3-4%, I don't know, it might make sense. You need to take a look and talk to a loan officer and see what it is that you two work out. And, the other thing to definitely consider is that, number one of the top Google searches on the internet right now is how to avoid foreclosure. And that really breaks my heart because I think that it goes to show how much financial stress and strain the average American actually is under today's economy. Now, inflation has come down. It's remarkable. I mean, when, Joe Biden was in office, inflation was like 7%. And it's kind of like this imaginary number that we don't really think about in today's world. But it was literally 7% inflation at that time. And now inflation has come down. It's only like 1.2%, I think. So Trump has done an incredible job of bringing it down. But it's never corrected the 7% that we were at. I mean, it's not like it ever went down to negative numbers to make up for the 7%. So many Americans are still strapped month to month. And, it breaks my heart because I think that a lot of those people could have avoided foreclosure if they had taken advantage, let go of that 3% interest rate or 4% interest rate that they're just clinging onto in order to, refinance, pay off a lot of debt, and, tap into the equity of their house to fix their financial future. Definitely you want to take a look at that, during those seasons. Don't wait until it's too late. Don't wait until your credit score is already destroyed. Okay? Don't miss a bunch of payments and then look at refinancing. That's not going to work. You want to definitely take a look at it, well in advance, ahead of time. And then, definitely there's going to be times when you want to refinance into a higher rate. And the reason is because you're maybe in an ARM. Maybe you're in an ARM and your rate is going to go up to like 9% and you can refinance it and fix that. like a 6% rate rather than taking the risk that it's going to go up. Now, in this last couple of minutes, I want to talk to you guys about a way that you can actually bring down your monthly payment without having to refinance. Save all that money. No appraisal, no credit check, no closing costs. And the way that you do it is you do what's called a recast. Call your mortgage company and see if this is an option for you. This is when you have some extra cash and you want to put it towards the mortgage. I have had clients who are like, oh, I have an extra $50,000. I want to refinance my loan to bring down my interest rate to lower my monthly payment. You may not have to do that. You can take that $50,000 and just go pay it towards the loan. Let the mortgage company, for a fee of like $500 or $1,000, recast the loan, and that can also bring down your monthly payment without all the closing costs associated to it. We've seen a lot of really great success stories with recasting, but the deal is that they're going to recast it based on your actual original loan interest rate, not on what today's interest rates are. So recasting really only makes sense if you're in that lower rate and you're trying to bring down the payment. Guys, I hope that you have a wonderful rest of the week. If you have any questions about refinancing, if you're looking to get started, give me a call. My phone number is 615-549-1933. I am not a loan officer. I can direct you to some of the best loan officers here in this market who can actually pick up the ball, run with it, and get you across the finish line in a really great way. Thank you for spending your Saturday night with me. Have a wonderful rest of your week. You're listening to The Real Deal on Super Talk 99.7 WTN. I'm your host, Kim Hollingshead.